Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Unbiased price action analysis, which means we cover the bull case scenario and the bear case scenario. We want to be prepared for any and all possibilities, possible moves. Okay, now we're looking at this chart, daily chart, look like a potential head and shoulders. Got the left shoulder from September 19th high, right shoulder from last Friday, and then the head over here from last September 26th ish. For this, as y'all know, head and shoulder patterns are usually bearish patterns, but the trigger for puts is usually the breakup, the neckline. Okay, the neckline's all the way down at 565, which aligns with the previous all-time high from July. Okay, I've been using that 565 level, and it's good to see that it aligns with this pattern that's developed these last few weeks. But once again, that 570 level, which is also around where the 5 DMA is, once again is support. We recaptured it last week. Once again, it's support. If this head and shoulder is to play out bearishly, two critical levels must fail. 570 and a breakdown of 570 would make me favor we go retest 565. And if we can finally, and I mean finally, break down 565, and I've been saying this, but now we have more context to back up my thesis, if you will. If you break down 565, bears take over control. Now, before I base it on a potential false breakout setup from previous all-time high, but now it has this head and shoulder pattern with it. Okay, so we break down 570, break down 565 will be very bearish. Now, if we break down 570, I recommend playing it level to level. You look to short if this level fail, take most profit 568 and leave a runner in case we go test 565. And the lower it goes, you can leave a trailing stop loss or just move up your stop loss manually, up to you. But below 565, in my opinion, bears would be in control. Now, for this head and shoulder pattern to be invalidated, 570 must hold as support. And from here, 572 and 573.7 must clear. If those two levels clear, head and shoulder pattern invalidated, and it's going to be bullish. We're heading to new all-time highs. 575, 576.5, and 578 would be the targets, with 579.5 above. Okay? Do we understand? Below 570 and 568, we are bearish. Below 565, bears are in control. Above 572 and 573.7, we are bullish. Okay? Triple Q, similar situation to the SPY. All right? It's above the 5 DMA. Right now, it needs to break it down. All right? Two levels it need to break down. 484 and 482. Those levels fail. We are bearish down to 480.6 and 478.7. Below 478.7, bears take control. This 478.7 is what 565 is to the SPY. All right. Now, if we are bullish, then we need to bounce 45.5 and 487 must clear to put 489, 491 and or higher in play. Does this make sense? Overall, bulls need to stay above the 5 DMA. Needs to stay above 484 and clear 485.5 to be bullish. And to be bearish, you need to break down those levels. Below 478.7, bears take control. NVDA. Recently we had a third rejection from the multi-month trend line. It led to a drop, a beautiful drop. Hope you guys made money off of it. But we did eventually get a little bounce here, where we bounce all the way back up to 125 before rejecting. We get a little rejection here. It's trying to gap down right now. If last Friday's high is a lower high compared to the one we had on September 6th, then support level today must fail. 120 3.5 and 122 must fail. If it does, that's a good sign that last Friday's high is a lower high and we are heading lower down to 118 and 116 and so on. Now, if we clear 125, remember that multi-month trend line is sloping down. So if we clear 125, a bottom could be in 127 and 130 and 131.5 in play. I know a lot of you guys want to trade wisely. I know y'all want to trade buys. Oh, it's bearish. Oh, it's bullish. Doesn't matter what you think. It matters what the price action says. and our ability to follow it is where the money is made. So if the price is giving us bullish setups and you're still entering puts, trading against the price action is going to spank you like your mommy and daddy did when you was a baby, when you was a child. Okay, you don't want to get spanked. You don't want the price action to play your daddy. Okay, you want to follow it. If it clears those levels, 125 and 127, look to long. If it breaks down 123.5 and 122, look to short, especially below 122, because there was buying pressure there last Friday. Gave us a beautiful bounce. So if it break it down, that buy zone is canceled. All the buy orders have been absorbed and nothing to stop NVDA to drop lower. So below 122, bearish. Above 125, bullish. Anything in between is chop. Tesla. Yeah, for more upside, it's going to have to clear 250 and 252. 252 is a fib level. If it clears 252, a bottom could be in a higher low, and we could head up a lot higher, 255, 257, 260, and so on. If there's a dead cat bounce, then support levels must fail. Now, the last level that was recaptured for Tesla was 248. Got to break down 248 for a false breakout setup. Break that down. That'll put 246, 244, 242, 240, and the big fib level at 237 back in play. Below 237, much lower lows are incoming. All right. Palantir, PLTR. Okay. Sometimes I like to give IWM a break and check out different stocks and ticker symbols to trade. Right now, Palantir has been destroying the bears. Is it pullback time? If it is pullback time, I have support at 39. If it fails, bearish with 37.7 and 36 in play. All right, look to show up below 39. If it's more upside, all right, I would be surprised if we get more upside today. But if more upside is the plan, then 40.4 is next resistance. And 40.4 clears, we're heading up higher. 42, 44, and so on. And keep in mind, we'd be flirting with previous all-time highs. All right, we can clear 42, 44, 45, boom. New all-time highs. The last previous all-time high was 44.9-ish. I'll round it up to 45. Okay, that'll be a resistance level. Either way, to retest that level, 40.4 must clear. And for a pullback, 39 must fail. Okay, guys? Let's take a look at the dog pool. Here's dog pool. Majority of activity, it says 567.98. So we look at 567.98, it was $793 million in premium. However, if we look at the 573 number, there were two orders. There was a 747.8 mil, and then there was a 357 mil. One was 573.06, and one was 573.07. Right around the same area. That's over $1 billion if combined. All right, so those are the dog pool levels, 573 and 567.98. We can round it to 568. Triple Q, 487.32 is where majority of the activity came from, and 487.6 is where the rest came from. So right around that 487 to 487.6 area, it's a lot of big money players making moves. Add those levels to your charts as pivot levels. NVDA, 122.85 is where majority of activity came in. The other one was at 124.92. We can round that one up to 125. If it clears, definitely would be bullish, like I said, based on the charts. And now we have dark pool level as well at 122.85. I got a 122 level, but it's up to you what level you guys want to use. I'm using 122. But there was about 167 million in premium at 122.85. Tesla, 250 is where majority of activity came in. That was around over $45 million. The rest was very, very tiny. So 250, that's one of my levels as well. And then let's see if Palantir have anything. Nothing for Palantir. All right. Option flow time, 100K premiums or above. These are my filters. I'm only looking at the above the ask. sweeps and out the money. I want to see the most aggressive plays, and it's still very bearish compared to the bulls. Like 11.2 million in premium for puts compared to 1.7 mil. If we look at the date, a few of these dates are, a couple of them are October 8th, but a lot of them have time on them. A lot of these puts have time on them. Few days out, couple weeks out, a month out. And as far as the calls go, they do got a few weeks out. December 20th for 580, November 15th for 574. And they ended around the 570-ish to 572-ish zone. So I like to, when I see that, I like to use where the big money plays enter as a point resistance level or a buy supply zone, something like that. So yep, that's what we have, guys. It's still way more bearish than bullish. Will the market makers pay them out? Look at this. Even with triple Q, 5.3 mil compared to over 800. This is from last week's, guys. Very, very bearish entering this week. Yep. This is October 4th. So this one's already expired. But for the most part, a lot of these puts are still, still have time on them. These calls are October 4th. There's no good. October 8th, that's for tomorrow. But these calls are expired. So definitely more puts than calls, okay? Will the market makers pay them out? NVDA is very bullish. Very bullish. And all the time, all the calls are for December, though. 125, 150, 130 strike price. Tesla, also very bullish. 2.5 million. No money in the puts based on my filters. And I'm looking for the most aggressive plays. Where's Tesla? It closed last week around 250, so it didn't gap down much. But there's people definitely bullish on it. But remember, whoever bought these calls, somebody sold it to them. So just keep that in mind. Selling calls is not necessarily a bullish thing, guys. And nothing for a Palantir. All right? Thank you guys so much. If you guys want more content from Uncle Charters, definitely consider joining my Discord. Other than that, good luck today. Peace.